Plop, plop, fizz, fizz. Oh, what a relief it is. Man, after I think it's like around 8 straight weeks of market declines, we finally end the week last week on a upturn, and we closed Friday pretty strong. So I'm not saying that we're just gonna rocket ship up from here. I really expect more volatility, but it sure was a nice little relief to end a pretty tumultuous 8 weeks. So, what are we doing here? Well, we're reviewing all the trades, my option trades for the week of May 23rd through May 27th, which is Monday through Friday of the week prior. We'll go through the closes, the opens, the rolls, the assignments, if any, all that good stuff. And then we'll look at how much premium I have cooking, what's the portfolio looking like year to date. And then we'll look at what the week is going to be looking like. Happy Memorial Day, and also happy birthday to me, because today is my birthday. At least the day that you're watching this video. So hope you had a good 3-day weekend. Markets are closed today. We're probably all sitting around twiddling our thumbs, wondering what to do. But at least you get to watch a video. So let's get going. There's a lot going on because I really did take advantage of the big strong up days we had Thursday and Friday. So starting off the week on May 23rd, I rolled my TAN put. I had a 70 strike. Let me get rid of these fees. I always forget to do that. I had a 70 strike that I had rolled previously for $7.08 or $708. I closed it for $523 for a profit of $183 in 5 days. And we'll look at the opens here after we're done with all these closes. I had a covered call on Ford at $16, closed it for $3, profited $23 in 22 days. Closed my TQQQ covered call. I had one covered call out. I closed that for 30 cents, made $18 in a day. Smith & Wesson, I had a 1250 put. I closed that out for $15, profited $39 in 29 days. I'll be looking to re-enter that if they happen to become under pressure again, which I suspect they might. Intel had two 3750 strikes out to June 17th. Closed those for 16 cents a piece, profited $71 there in 27 days. MPW, that's the Medical Properties Trust REIT, had a 17 strike there. Closed that for $17, profited $25.80. I wouldn't mind entering back into that one at that 17 strike if it gives me the opportunity. SOXL, this was a roll previously. If you guys all remember all my rolls from last week, if you missed last week's, you'll see all these. But this was the roll from last week that I had 5 contracts at a premium of $4.53 or $453 per contract. I closed them down for $352, so I profited $507 there in 8 days. So I'm just peeling. What I'm doing here is peeling off the profit as it comes, and I'm rolling these. The ones that say roll, I'm rolling them. I'm adding a week, a few days, or a couple weeks to the contract, and collecting credits and peeling off the profit. Bank of America, same thing. 38 strike. Closed it down for $224, profited $123 in 8 days on that one. Dutch Bros, I had a 25 strike, closed that down for 55 cents, profited $121 in 7 days on that one. My QQQ roll, that was a 298 strike. I closed that down for $7.11, so profited $252 in 10 days on that one. And then I reopened it. We'll show those below. SPLG, rolled that one. Exited that one for $1.84, profited $113 in 9 days. My 50 strike on Dutch Bros, yes, a 50 strike. I rolled it and I peeled this one off, exited this one for $15. Peeled the profit of $888 off of that in 8 days. Art K closed down. Art K, that was the big one. That was the big dog. I had 757 strikes on it. I was able to close that down for $12.50. So it took profits of $2,021 in 8 days off of that one. And that was a roll. All these ones are rolls now. Then there's that tan one again. So I was able to do this twice, and I rolled it again. Took this one off for $3.75, profited $211 in 4 days. And then SOXL had 5 contracts there at the 25 strike, closed that down for $3.10. Profited $459 in a day on that one. So those were all the closes, a lot of closes, especially Thursday and Friday. I rolled a bunch of positions out. Like I said, I added a week or two. I only got down lower to strike on, I think, one of them. But mostly, I'm keeping the same strikes. If the market's going to continue to go up, I don't need to roll the strikes down, to be honest with you. I think short term, I do believe the market's going to go up, but that's just me. I'm no expert. We can get a rug pull here, and I can look like a fool, but I mean, that's fine. I kind of consider this kind of my long-term stock positions anyway, to be honest with you. So let's take a look at the rolls of what we opened, basically. Some of these are going to be repeats because we opened and closed them during the same week. For instance, that tan one, that was only 4 days. We opened it on May 23rd, closed it on May 27th. I opened a covered call on Pay, P-E-Y, a little prematurely. I did a 22 strike and I got $15 for it out to June 17th. And I did a covered call. That covered call that I closed earlier, I reopened it the next day, 39 strike, and I got $44 for it because I do own 300 shares of TQQQ. QQQJ, I do have 100 shares of QQQJ. That is the NASDAQ Next Gen 100. What I did was basically a strangle here. I did a covered call out to July 15th at the 27 strike, collected $27. And I did a put out to July 15th at the 23 strike and got $73. So got $100 there for that position. And there's that SOXL that we opened on May 26th, closed on May 27th. Bros, I opened after I closed that 125 put. I opened up another one out to July 15th, collected $130 for that. And there's that Bank of America that we rolled. Kept the same strike, $38, and I got $234 there. Camping World, I sold a put out to July 15th at the 25 strike, collected $180 there. I did a strangle so I got 2 covered calls on TQQQ now. One is at this strike, 39, and one is at this strike at 44. My cost basis is 38 something. So I did a strangle here as well, kind of the same thing I did with QQQJ. I got a TQQ put out to July 15th, 20 strike, collected $59 there, and then the $44 covered call, I got $73 for it. And there's the QQQ, that 298. This one I did roll down. I rolled down to 290, and I don't know why I did that. I really should have kept it at 298 because we were already up big. for the day, but give myself a little cushion. Still not a bad position to be in. July 15th expiration, one contract, $766 collected there. And then tan, again, I think I did this one 3 times. Rolled it to July 15th to the 70 strike, kept the same strike, collected $435 there. The Dutch Bros that I rolled it out to July 15th, kept the same 50 strike, and got $1,625 there. SOXL, I think I added a week to the contract, kept the same 25 strike. I should say contracts because there's 5 of them. So collected $340 for each contract there for $1,670. SPLG, rolled that out to July 15th, kept the same 49 strike, and collected $239 for that one. And then finally, ARK-K. This is the one that I rolled down. I was at 57. I rolled it down to 56. This one actually cost me. I spent a few $100 to get down to 56. So I had 57 and I went down to 56. So that's a $700 difference. I think I paid $300 to do this. But that was fine because I peeled off that $2,021 in profit and rolled it down. Basically, since I had 7 contracts, rolled it down $1. That was $700 kind of saved there. And I collected $8,500 for those 7 contracts. So those are all the opens, man. It was a great week. Hopefully we can follow through with Thursday and Friday. The way Friday closed, I think we will follow through because there wasn't just like weakness at the end. Typically, you know, if you end the day with weakness, you'll open with weakness. It seems that way, and we were strong through and through. So let's take a look real quick at premium cooking. As you can see, May 27th, week ending, we closed 15 positions. We opened 15 positions. We peeled off $5,062.13 of profit. We sold $14,062.42 in premium. That's basically rolling. Total premium cooking, $14,568.29. Most of that got rolled out to July, which is $12,300 of that. So I'm still looking to put some stuff on here in June for June, and you know, either June 17th or June 24th, somewhere in here, just to fill this out a little bit. Maintenance margin went down to 35,000 from 38. Buying power usage went from 39% down to 31, which is nice. Cash balance went up from 35,000 to 49,304. Just a sneak peek. Well, no, I'm going to save it. I sold some stock, okay, and sold out of a bunch of stock, and I bought into some stock. So you'll have to wait till Friday when I do my portfolio update, or actually Saturday. This coming up Saturday, I'll have my portfolio update, and you'll see the changes there. I did deposit some money, $4,577.94. Reason why is I had a little bit more money in my savings account than I normally would have. I try to keep about roughly, it's not quite 6 months. The way inflation's been, it's not 6 months of expenses anymore, but it used to be 6 months expenses, and I'm still just keeping that mark. And so I took the excess and dumped it in here. So the net lick went from 96,700 up to 112,800. Big jump in 1 week. You know, if you even subtract that out, you know, it's 108 something. That's still a big jump, week over week. Return on maintenance margin, that's the profit realized, divided by the maintenance margin of the week prior, 13.32%. And return on net lick is the same number divided by the net liquidation value of the previous week, so 5.23%. So can't complain at all. Now let's take a look at year-to-date numbers. So if we look year-to-date, oh man, where's my stuff? Let me pause. All right, here we go. So we started the year 123,100, final value 112,800. So we're down 8.3% for the year. Now, I did make that deposit, so if you back that out, I'm down 12%. I really don't care, but it's about 12%. So I'm not going to back it out and do all that fancy accounting. It is what it is. So how's that considered over the indexes? S&P 500 down 13% for the year. NASDAQ still down 23.38% for the year. Dow Jones down 9.22%, and the Russell 2000 down 17%. So if you do factor in the deposit I made and you back that out, Dow Jones is doing better than me, and we're doing better than all the three other indexes. So I'm quite happy. Now let's take a look at what's coming up. It is a holiday today, so what's coming up in this next week as far as earnings? And I don't know if I can zoom in on this very well. It can do a little bit. Next 5 days, CRM Salesforce. That's going to be an interesting one. I'm not going to play any puts on it personally. I'm not really looking into doing too much. I might do a couple things here and there to, like I said, to fill out June, but not very much. But Salesforce should be an interesting one because of that's the, kind of, I don't know if it's work from home, but it's really going to show the how the workforce is right now, the job market, right? How's that looking? BEKE, that's a Chinese real estate, not really a big deal. Technology, though, there's some real niche players reporting, like HP, Hewlett Packard, and then Hewlett Packard Enterprises. They're both expected to have increased earnings, so hopefully they beat, because if they don't, this market might punish them. Who else? Chewy, that could be interesting. Nothing else really catches my eye. MongoDB, another tech. So a little bit of tech that might affect the market here in this next week, but nothing real big. CRM is probably the one to look out for. They're actually expected to have down sales. So the expectations for earnings is really low for them coming in this year because, they're coming off the COVID bump, right? So they can probably beat expectations a lot easier, seeing that it's expected, right? So anyway, that's all I got for you. Hope you guys enjoyed your weekend. Hope you guys enjoy your week. Hopefully we continue with Friday. That would be nice. So you guys have a good one. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.